Hey, it is Cody the Duke. Apologies, I've been meaning to make several other financial videos. If you've watched my channel, I do have one that is a bit lengthy on just general personal finance, which I want to dig a lot deeper into, as there are so many different aspects of it, and it is hard to think of where to start. But obviously, the thing that right now everyone wants to know is or what I get asked the most probably. I started out as a stockbroker, financial advisor for Morgan Stanley, majored in economics and double majored in college, and now have do a lot of investing myself, and maybe one day I'll show returns and whatever. But I was just talking to my 10-year-old daughter on the way to school, and wanted to talk about what we were talking about, which my 10-year-old daughter understands. And no offense to other people, I just think these are things that aren't taught in school or that most people understand. So one book that I had a great economics professor that told me way back in 2001, I guess, to invest in Walmart when the economy is down. And I didn't quite understand that much then, but what he meant by that, and what I'll get to in a second. So going back to what I was talking about with my daughter and my professor, he had us read a book by one of the greatest value investors of all time. His name is Benjamin Graham. He was an economist. His principles still apply, and even with all the changes in technology, all these principles still apply. So Benjamin Graham wrote a book called The Intelligent Investor, and everyone knows Warren Buffett. He basically follows the same principles as Benjamin Graham. And going back to what I was talking about with my daughter, what is a stock? Most people think of a stock as in the day trading sense, or almost like gambling. And I always get asked to tell someone a stock right now that is $3 to $5 that is going to be $100 next year. There's maybe one of those, and nobody knows which one it is. So if somebody tells you otherwise, they are completely guessing. The truth is, a stock is valued, has a value, and then it has a price. And I'll get into that in a second, but what a stock is basically they take a company and divide it up into a bunch of pieces, whether that is 100,000, a million, or 100 million. They divide that company up into all of those little pieces, and then they offer them for sale, and that's what's called an IPO, or there are other things like now called SPACs, but really at every point, every publicly traded company went through an initial public offering where they were a privately owned company, like Chick-fil-A is now, which is why you can't buy Chick-fil-A stock. And then they went public and broke it up into a bunch of little pieces and sold it off and made a bunch of money. So this is what owning a stock is you are owning a piece of a company. So if you think of it that way, if your investing strategy is this a company that I would buy, then you will probably be better off than 90% of people who invest. And a big thing, that most of the old, very smart economists like Benjamin Graham would have suggested is to invest in things you know. So thinking about the market today, and I can give a lot of different examples, and I will give some stocks in this video, I promise. But things that you know, or companies that you know have been around a long time. And look, there's diversification. I do have a part of my portfolio that I own a little bit of gold and silver. Not something I really bank on, but it's diversified. A lot of my video is in guns. Most people don't see those as investments, but I have bought a gun for $400 and it is now worth $700, or they hold their value. Pieces of art. So if you think of stocks like art, if I buy a painting cheaper, like $400 from a new up-and-coming artist, maybe that artist becomes hugely famous, and in 50 years that painting is worth $2 million. Okay? Yes, it could happen. Or I could buy a Jackson Pollock, or whatever. Some of these, I'm not big into art, but a Monet, or I mean, you can't get originals of those because they're in museums and worth billions. So, but let's say I could buy right now a Jackson Pollock for $1 million. I know that is going to hold its value, and probably in 10 years it's going to be worth $1.3 million. Those are the stocks, the equivalent of a $1 million Jackson Pollock, that I try to buy. And that's what are typically known as dividend aristocrats, or there are what are called dividend kings. But your established companies. Now, that's not all of my portfolio, but I do, for my age, like getting paid out dividends. So I own a lot of pieces, diversification of a lot of different companies, most of which I know the company and what they do, and I'm familiar with it. So I have made the mistake, and in most situations, if I looked back at it, I would say the times that I lost money were the times when I invested in something that I didn't understand. And those are the times where I bought a stock that was $21 because I heard somebody said to somebody that it was going to go up to $80, and then next thing you know, it's $6. I have one of those now, which I usually invest either $1,000, $200, or $50 to $100 in a stock at any given time. And I invest every month, so I usually will break it up depending on the type of stock I'm buying to re-diversify my portfolio, which is a whole nother video. But in owning little pieces of those companies, so when I own a piece of Coca-Cola, I know Coca-Cola is going to be around forever. I own a lot of pieces of Coca-Cola, and it's still a great stock to buy right now at $60. It's going to pay me a 3.5% dividend, which dividends are basically, as an owner of Coca-Cola, the value of Coca-Cola in general, like when I bought it originally, it was like $38, and then I bought again at $43. These are the big purchases, and then bought again at $49, and then recently I bought again at $53. This is over a decade, but still, now even at $60, I will probably buy more Coca-Cola. So every quarter they pay, usually it varies, but around 3 to 4% in dividends over the course of the year. So at the end of the year, that $60, whatever, I have $3 or whatever it is, $2.80, I think, something like that, $3, let's say. Doesn't sound like a lot, but when you take into consideration that over the course of the last, let's say, 5 years, I've bought at 43, 47, 49, 53, and it's now up to $60, the stock is not haven't made anything until I sell it, but I've been getting dividends paid out to me over the course of the last 10 years from Coca-Cola. So anyways, that is owning a stock. And one thing you should think about heavily, and I'll give more examples in other videos because I know everyone wants to know one, but right now, think about diversification in industries. So where is our what is popular right now? What is going to be the next big thing? I know everyone's trying to figure out the electric vehicles are going to go up. At some point, everyone knows we're going to be in a situation where there are no gas cars and everything is an electric car. So I have invested in an electric battery or essentially company, which has been doing phenomenal. So if you're looking for one that is $4, even though I hate saying this and I would hope you don't bank on it, but GWH is one that I've bought recently. Bought at $4.41, and I think it almost hit $6. There's a very small portion of my portfolio. Now, mostly I'm invested in companies like AbbVie, which is a health company, $130. Procter & Gamble, Colgate, Microsoft, Apple, Coca-Cola, KDP, which is Keurig Dr. Pepper, Gilead Sciences. So that's another one that I would suggest right now is priced very well that I'm looking at. Verizon, that's another that I'm going to be picking up, and I think Verizon's dividend's coming up in a week or so. It's been killed lately, but AT&T pays out a fat 8% dividend. So telecommunications, AT&T and Verizon, Warren Buffett owns $8 billion in Verizon. He's invested in the company. He sees it as he's actually does own companies, the same way he did with Geico, if you know anything about Warren Buffett. But those are just a few of companies I've owned for a long time. APD is one I recently bought because it dropped down to 220. It normally trades around 300. Bought it when it bottomed out a couple weeks ago, and then it went up. So another one that I would look at, healthcare right now, is been hit hard. So there's an ETF called MPW that pays a good dividend and owns a lot of different healthcare stocks. I think it trades for $20 or so. And then another healthcare company that works in home to home, that I think right now it's been killed, but it is going to do well long term. That's the thing. If you buy any of these, yes, you could wait and sell them in a week when you've made $3. If you're that type of investor, I wouldn't suggest watching my channel. I've given a few of those, but hopefully you don't take from this video that you should just go buy GWH. MPW I view as a long-term hold, but AHCO, Adapt Health, is one right now that has been killed, but it is a good company that is really worth about $20 to $25 per share. That's what I see as its value, even though right now you can get it for $13. So will it be $25 in a month? No, probably not. Will it be 16? Maybe, and you could sell it. I've made that mistake many times as well. But will it be $25 at some point? Yes, definitely will. But the same can be said about any company. They are a good one. Any good company that you are willing to invest your money in and view yourself as an owner Like McDonald's right now has been getting killed, which is fine. But I buy when things are down, and I hold when things are up. And most people sell when things start to go down. And Warren Buffett's famous for saying, when others panic, you stay calm. When others are calm, that's when you should be, or when others are panicking, that's when you should be excited. So when the market is tanking, and this is something we'll get into later, but the cash you have on hand, that's when you should be excited, because those stocks that were maybe overpriced, you can now get at a good value. So I have invested a lot in banks lately. I really think Bank of America is a strong one right now. There's one, STT. I've bought into BlackRock last week, but I think it's already started to climb back up. But that's about $700 a share. I got it at $670. So my point is that you get to know certain companies to the point where you would buy them the same way as you might go out and buy a franchise of McDonald's in a good area because you feel like it's going to do good, and you know that people can't resist McDonald's. Even though they say, I'm not going to eat that ever again, they go back again because the french fries are delicious. Or that everyone's going to drink a Coca-Cola no matter what at some point, your average American. So that's where I put my money. I'll get more into my portfolio in a later video, but understand in your investing what you're buying and be diversified. If you start with $1,000, get $200 of one stock that you really like, 200 of another, 200 of another, 200 of another, 200 of another. If you are going to buy one of those riskier ones like AHCO or GWH, so I mentioned, make sure you include it with something like a Gilead Sciences, a Coca-Cola, a Procter & Gamble, a Kroger I've made a ton of money on. But I also own like SJR is a communications company. Pembina, PBA, is a energy gas pipeline that is tremendous dividends. I've made a bunch. Enbridge, ENB, is a great dividend company. Real estate, I'm nervous to suggest saying to buy real estate, but I own a ton of real estate investment trusts. The ticker O, Realty Income, pays out a dividend every month, 4.4 something percent depending on when you bought it. But it's usually 59, 55 to 65, 70 bucks. And no matter what, you're going to get 4% every month. You get a check, no matter what. There are other companies like that that are very good. They're either called REITs or BDCs or MPWs, which I can talk about later, but the ones that I like are, they're called GOOD, GOOD, Main, MAIN, LTC, long-term care, let's see, GLAD, GLAD, Gladstone. But anyways, these are BDCs or REITs. Like a very strong REIT, if I had to say buy one right now, would be WPC, which is WP Carey. They are probably the most established. But the biggest one of all is monthly dividend that I've owned since it was one of the very first 5 stocks I bought. It's called STAG, STAG. And I'm not recommending it as a buy right now, but I did a lot of research into what the best stock would be, and it was one of them. And I bought in at like 25 bucks a long time ago, and I've been getting monthly dividends from them forever, and have a lot of my portfolio in STAG. It's one of my higher positions because I've held it for so long. There's never been a time where I'm like, I need to get rid of this, which that barely ever happens to me anyways. The only time that happens is if it's a company I bought that I didn't know. So buy what you know. I will try to get you a list of my whole portfolio, but ETFs I like more than mutual funds, but you can get the whole market or a whole sector or industry, like if you want to invest in healthcare or airlines, like, which are doing well right now, or if you want to invest in marijuana stocks. I mean, I did that for a little while and they're down right now, but I bought 3 ETFs called TOKE, YOLO, and CNBS, I think. The 3 of them went from like $11 to $20. Again, I don't know a lot about, I don't smoke marijuana or know what that industry is going to do, so I got out of it. But that was when everyone was into, like, pushing medical marijuana and states were legalizing it. And so I got in and got out of those, which is something I don't really do, but shifting money around, rediversifying, is something I can talk about in another video. Anyways, didn't mean for this to take that long. I'm sitting in the driveway, so this is Cody the Duke signing off. I'll try to make more of these financial videos, but if you are not invested in the stock market, hopefully the only reason is because you are in debt and your money should be going towards paying that off. But if you're out of debt and you have money sitting in the bank, which is great, you have your emergency fund and a savings account, you need to start looking into investment and diversification. And diversifying your stock portfolio is a great idea. Also, diversifying your assets in total by things that I mentioned earlier, like owning an actual piece of land or a part of a business, or maybe a little gold or art or whatever it is. Again, if it is something that own a little bit of it. Now, I'm not big into crypto. I know it's a big thing, but to me it's risky. I don't know a lot about it. So yeah, I own some Bitcoin, but do I feel great about it? Like, no. I think, like, honestly, I feel safer that my gun's gonna be worth more than what I paid for it than I do than the crypto will, because it changes so much every day. But I could be totally wrong on that. But it's not something that I know well enough yet. But I will. So hopefully you learned something or caught something from this video. Please drop some more likes. Like and subscribe, but drop some comments and let me know what you think or what you want to know more about, and I will happily break down a sector or explain any part of the financial industry. I've been Series 7 licensed for many years, and will be happy to explain how everything works. So it's Cody the Duke. I gotta go get one of my other kids to school and then start work. All right, have a good day. Bye.